This is the briefing for Friday, February 28th. It was a really interesting week this week in the stock indices. This is a chart of the spiders on a daily basis. And as I've been showing this for quite some time now, this rotational pattern has been very, very important because it's established some very important key reference areas, meaning support at the 580 level, which is this level right through here, and resistance at the 610 up to about the 613-14 level, which is this area right through here. Breaking to the upside is basically going to suggest that we're going to continue in vertical development higher. You can see that we've been in an uptrend and then we've paused. As markets run and pause in all degrees of time, you can see this pause a little bit longer in time than I would have expected, but at least this pause, it has been a pause. This week we came down and tested the 580 area, which was support today. I think the low today was pretty close to that. The low today was 582.44. So you can see we came down, tested this 580 area, and then the market completely reversed. And that reversal took place in the last hour of trading, and it did so on pretty good volume. Now you can see volume on this move to the downside has been increasing and has been pretty substantial, so to speak. 52-week highs minus 52-week lows have been declining, and breadth has been declining, although it recovered somewhat in today's trading, with 971 shares positive at the close today as opposed to lower. Now, what's going to be important here is whether this rally that we saw in the last 30 minutes or so of trading in today's trading is going to last into next week, or whether we're going to see another rotation back to the downside. Now, the markets spend most of their time in rotation, and that's pretty obvious just from looking at this chart. So basically, if we do bounce off of this 580, which it appears we have today, we traded through the 590 level, which was this area of rotation's lower extreme. Then the next level of resistance is going to be 610 up to about 614 in terms of the spiders. Now, going back to the hourly chart, this is hourly chart of the spiders, the Qs, and this is the IWM for the Russell. You can see that all three of them had a real surge in buying, and you can see based on an hourly basis what happened with volume in that last hour of trading on all three of the indices. So there was definitely some buying that came in at the end of the day today. It's going to be important that that be supported and there's follow through in Monday's trading. And that's going to be extremely important, because if we trade back below 590, that's going to open up a retest of 580. And potentially, if we retest 580 again, then probabilities are increasing that we're going to break it, which would bring down the next level of support to the 565 level. But on a greater degree time and price move, that would be breaking the previous lower low, or I should say higher low, which would then suggest that the potential for a greater degree time and price counter trend move. So this is a weekly chart. You can see the run, pause, run, pause, run, pause. So breaking the 580 level would then suggest that this is breaking the last higher lows, and is a run. This would be a run on a weekly basis, and then a pause to some degree of time and price, which we've yet to be seen if and when that occurs. Now, the market does spend most of its time in rotation, so it would be logical, even, and I discussed this when we were up here, that if we can't break out, then it's going to be logical to see rotation back down. Same thing applies here. If we can't break out to the downside, we're going to see rotation back to the upside once again. Now, in the Qs, you can see the Qs were in rotational pattern with this 505 level was support. Now, the low for today in the Qs was the 496.93, so a little bit more than the 505 level. Same thing happened yesterday. Yesterday's low was 499.74. So really about the 500 to the 505 level is support now. If we trade below that next week, then that would suggest potentially that we're going to trade below today's low, which would then open up the possibility of trading down to the 450 level. Alternatively, if this rotation is complete, then we're looking at retesting the 540 level at some point in time. Volume increasing on the move to the downside, volume spike as you saw in the last hour of trading today. Breadth in the NASDAQ was declining all through this move to the downside, strengthened somewhat today with 926 shares positive. Now, the Russell was really at a critical level today. This 215 level here was just extremely important in the Russell. We traded through it yesterday, closed below it. There was no follow-through today. Well, there was a slight follow-through, but we closed right at the 215 level in the IWM. That's going to be critical on Monday morning. If the Russell begins to sell off once again, I think that's going to be potentially a red flag that would suggest that we're going to see the other indices begin to follow back to the downside once again. But for right now, it appears that support has held in all of the indices, and it does appear that we're potentially going to see some type of rotation back to the upside. Now, in terms of overbought and oversold, we are basically neutral still, and we've been that way for the last couple days. Same thing with the NASDAQ, basically neutral in the NASDAQ also. Percentage of stocks in the S&P 500 above their 50 and 200-day moving averages, you can see that it is improving, and it has improved. Not so much on the 200-day moving average, but this is a shorter-term internal indicator that would suggest that potentially more stocks are beginning to trade above their 50-day moving average. And that would suggest then that we're going to see an increase in the 200-day moving average as well. And same thing with the NASDAQ. NASDAQ is down in terms of stocks above their 50 and 200-day moving averages. So this is going to be very interesting to see the resolution of this intermarket divergence and internal divergence with the NASDAQ and the S&P 500. And then, of course, the Russell, you can see it ticked up slightly, but it was in a down mode, and percentage of stocks in the Russell above the 200-day moving average is moving lower as well. So basically, the spiders, or the S&P 500, is the stronger of the three indices, but at least for right now, we are holding above critical support. As long as we continue to hold above that support, the probabilities are such that we're going to see a rotation back up again. Now, 590 in the spiders is initial support, and trading below that, and I'm just talking for myself, I would look to be short, at least with a small position, tightening my stop as we approach the 580 level, and then if we break 580, adding to that, assuming the internals are confirming a move back to the downside. Trading above Thursday's high would suggest follow through. Trading above today's high would suggest follow through, and then above Thursday's high. That would then increase the probabilities that we're going to be back up to test the 610 and to the 614 level. In terms of the Qs, looking to be long above today's high, there has to be follow through, and that first hour of trading is going to be important. We can open up potentially with a gap on Monday, but then if it doesn't hold and it trades back through the day's high, that's going to suggest rotation, potentially test the day's low, and then certainly long above Thursday's high as well. In terms of the Russell, long above 215, 220 is next resistance, adding to the position above 220, and then the next level of resistance coming in at 227 up to about the 230 level right through there. It's going to be very interesting to see how this resolves itself. There was more buying that came in at the end of the day than I would have anticipated. This was really just a very strange move in the last 30 minutes of trading, so to speak, with pretty good volume coming in as well. I'll pick this back up on Monday for subscribers. Have a great weekend.